I've been a portfolio manager for about 15 years or so, and managing high net worth and institutional funds. All right. In Singapore, we are licensed, meaning MAS licensed company, and we manage a portfolio of about 4 billion. And of course, we have lots of products like property fund, private equity, we manages family office, and then we have FX fund, and of course equity fund, okay, which is shares. Okay, we are trading Hong Kong and Nasdaq shares. Okay, but today's focus will be on FX, and I will tell you and I will teach you why risk management and the psychology of a trader is very important. Okay, it is not about performance. Of course, performance is very important, but it's always about risk management. Because if you manage your risk well, okay, the performance will take care of itself, right? If you don't manage your risk well, no matter how much you make, one day it will all go down the drain. All right, especially now with this climate, with COVID. Of course, in the beginning of this year, okay, there's a huge sell down on the capital markets, and of course now there's a sharp rebound because fundamentally the companies are still strong, especially the IT side. More people are using, that's why they're supporting the market. But in March, if we can remember, there's a sell down on gold, on oil. Okay, the oil crisis came, and then it wiped out about 20% of the capital markets. Okay, so 20% at one time may be a lot to many people, especially those people who trade Canadian dollars. Okay, Canadian dollars is very correlated with oil, and when the oil dropped to $5, Canadian dollar and Aussie dollar goes the same way too. So if you do not manage your risk well, and you will be wiped out at least 20%. All right. So hi everyone who just came in. Let me start the presentation slide. All right. Okay, approach. There's three approach today: trading, psychology, and risk management. Okay, as you all can read for yourself, right? 90% of bad trading decisions because they get emotional and lose their better judgment. All right. So how to keep your reactions and judgment in check? Okay, you must always be very objective, and of course the word to you is be you can the best if you can segregate your mind apart, meaning the risk and the performance, you can separate them apart. Okay, and then dissect the meaning of trading and psychology. That's what I mean, dissect meaning. Okay, trading is trading, psychology is psychology. If you can manage your psychology well, okay, you in the same place, we can also manage your trading. All right, so if you, let's say for example, if you have a very good trading strategy, okay, your EA is fantastic, okay, every month 20% return, okay, and then but psychologically you're not strong, right? Even though the EA, let's talk about non EA, let's talk about manual trading, but your psychology is not strong, you might tell you that 20% is not enough, let's go for 30%. Then when shit hits the fan, something happened, like COVID happened, oil crisis happened, your portfolio went down to 40%. Then psychology wise, what do? You will cut, or you will hold longer, hoping that the market will return. Okay, I will not give you the answer to that. That's based on your own. All right. I also will not tell you what will I do, because every type of instrument that you trade on is different. Okay, so There's no rule of thumb whether you will cut at 40% or you continue holding on. All right. So psychology is very important. Okay, to maintain successful as a trader, you have to work hard to cultivate a mindset. Okay, you have to, because imagine if you trade 1,000 of your dollars, $1,000 to you is nothing. You can trade as many as you want, trade as big as you want, because you only $1,000. Okay, you did very well for $1,000. All right. So for example, $1,000 you can make $1,000. What if you trade $100,000? Don't tell me with the same mindset of trading $1,000, you can make the same amount by trading $100,000. Definitely no, right? So different people have way of trading and tearing up. Okay. Okay. Risk management is the foundation. As I said before, risk management is very important. And then risk planning, risk reward ratio, and position sizing. Okay. Now let's talk about risk reward ratio. Okay. If your risk reward ratio is good, all right, meaning every $10 you make, you only risk $2, then that's very good. That's 1:4 or 1:5. Okay, let's say for example your risk ratio is 1:1, meaning every $10 you make, you risk $10. That's also okay, provided your win rate is higher. Okay, if your risk ratio is 1:1, your win rate is 30 is to like out of 10 trades you win three and lose seven, then that's not good. All right, the best of both worlds is risk reward ratio is good and your win rate is good. Okay, win rate you kept between, you're safe if your win rate is 7-3, meaning out of 10 trades you win 7, lose 3, and the risk reward ratio is 1:2 or 1:3, then that's fantastic. All right. Okay, this is the calculation basically. Okay, you can take a look. Let me do a quick explanation. All right, that's what I say risk reward ratio, meaning out of like every $1, all right, you are taking 1,005 minus divided by 1,005 minus 1,450 over 1,006 minus 1,500. So risk reward ratio 50/100 is 1:2. All right, as you can see the curve. All right, if your risk reward ratio is good, your win rate is high, and that's the point. You can see the point between the line and the curve touches. That means that is your pivot point where you make the most from it. Okay, this is just a simple calculation. Okay, why is it important to have a good risk management? Okay, as I mentioned before just now. Okay, the points that I bring up. So this is in word form. You can take a read, and then you can any questions you can ask me. Right, let me go to point number 4. Okay, risk management is going to permit you to trade in a smart way and give you the flexibility to choose how much you want to risk per trade in a way, so it allows you to maximize your profit and minimize your loss. All right, if you apply the risk management principles well, then you are going on for the long run. All right. Okay, so however, not following any money management rule, okay, has the potential to break your trading career. Okay, money management is also very important. Okay, you manage your money well, manage your risk well, you can go far. Okay, now we talk about brokers and platforms. Okay, of course, brokers, you got to choose the right broker for your trading. All right, your trading has been very good, but if the broker that you choose is not good, all right, it's some offshore broker or whatever, then your money is not safe. All right. Okay, usually you go for a tier 1 licensed broker like UK, Australia, Japan, US, Singapore. Unfortunately, Australia, only Australians can open Australian brokerage account, but there are some Australian brokerage can open offshore. Okay, just that they put you in a different jurisdiction. Okay, Singapore is also one of them. If your country has good brokerage, you can also approach them. tier 1 license, make sure they are licensed. Segregated fund account, meaning your fund is not mixed into your working fund, right? Meaning you have 100,000 in there. If the broker bankrupt, all right, your 100,000 will not go down with them because it's segregated into your account, into your name, all right? So even if the brokerage go down, go bankrupt, your 100,000 is still safe in there. Okay, make sure their spreads and commissions are good. Okay, make sure they are onshore support and customer service. Okay, this is very important. Is there any problem, you can manage to get them immediately. They can help you solve any problem. Because transparency. Okay, now let's talk about algorithm trading. Okay, before I go into that, okay, we talk about manual trading. Okay, I believe everyone here in this chat has tried trading before, and then they have gone manual before. All right, and it's not for me to say, but statistics says that 80 to 90% of manual traders will lose money. Okay, and I believe that's true because due to many reasons, sometimes not due to their trading, they will lose money because the brokers play them out. Okay, the brokers will either book them or gun for their trades, things like that. So having a good broker is important, and then risk management and your risk planning is important. Okay, comes to algorithm trading. Okay, the it's the era of the machine, right? The era of the data, era of data collection. Okay, so right now there are many firms doing algorithm trading. You can go and Google. Okay, Renaissance, Reliance, Vanguard, all these firms, they are using algorithm trading. And what is the edge over manual trading? Okay, algorithm trading is fast and there's no emotional. It's not emotional. That means there's no emotion, like you yourself, no emotion. Okay, when it goes for a trade, it will go. All right, when it's time to get out, they will get out. No emotions. All right, as long you put your risk management in place, meaning your TP and stop loss in place, then let the algorithm do the work. Right, as you can see, right now passive investments such as index fund and exchange traded funds control about 60% of the equity assets. All right, so with quantitative funds, those which rely on trend following models instead of fundamental research from humans now accounts for 20% of market share. Okay, this is report from JP Morgan. Okay, so now meaning stock trading, okay, is the hands of automated buyers and sellers. Okay, and it's increasingly sensitive to headlines. Okay, more prone to sharp price swings. Many notables investors believe. All right, meaning that for stock market, right, even if you have a very good algo, it sometimes it doesn't really makes you lots of money because stocks is always easier to manipulate compared to forex. Okay, and right now I'm talking about general view. Later I'll go to forex. Okay, and why we use design algorithm to trade the forex market. Okay, as you know that as of this year, I don't know how many trillions is traded per day. I guess it's 5 to 6 trillion volume per day, and it's unlikely that it can be manipulated. All right, unless you're trading on very exotic pairs. Okay, now from CNBC, okay, established last year June. Okay, 80% of stock market now is on autopilot. Okay, meaning what? Okay, autopilots meaning right now even the robots are trading the stock market. Okay, very little people are trading on buying sell of stocks anymore. That's why you see stocks swing are very volatile these days. Okay, application of algorithm trading. Okay, it will seek out trading opportunities, and then it will behave with consistencies and with on liquidity and volatility patterns. Okay, meaning design of algorithm is very complex. It's not only designed on back tests, like look at the chart, gather all the data from the last 10 years, and then you put into your EA, and then let the EA, generate an algorithm for you. There's no such thing. Okay, design algorithm is it's not simple as you think. You need a team of at least 5 to 10 people designing different kind of software and to trade the market. Okay, I see a few questions. Okay, how to automated fintech app will help us to play. Okay, Nick, let me ask. Let me answer your question. Okay, how automated fintech app help us place orders? Okay, not to worry. When the fintech app has the algorithm, everything is automated from starting trading to closing. Okay, it's not so exact, it's not sophisticated, as you know that everybody is doing it right now, whether is it good or bad. Okay, as I know, I'm very confident my algorithm is good. What is algorithm trading? Algorithm trading means it's automated. Let's take it as a robot. Okay, this robot is replacing a human. Okay, this robot help you trade the market. Okay, so this robot is full of data, fit with data to understand, okay, the market, and then let you trade on it. Okay, and what is the financial market outlook for coming October? That one, leave it for later. Okay, I will answer the question. Okay, I see a lot of comments coming in, and okay. Let me continue. Later, I'll answer all your questions. Okay, especially when it comes to algorithm trading. If you're on your phone right now, maybe you can Google algorithm, and then you go and read what does algorithm mean. Okay, algorithm means it's a kind of EA. It's a kind of robot that trades the market for you. Okay, that's why I come in. That's why I design it, and that's why I have a trading account with FOLLOWME, and that trading account is operated by an algorithm, operated by a robot, and then it trades for you. Okay. Our alpha and data blah, 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 blah. Okay, as you can read from my slide, okay, we have data mining, we have pattern recognition technology. Okay, we have gained predictive edge over the various market cycle. Okay, market is a different cycle, so even an algorithm can predict, okay, when is the next cycle coming. Okay, this is one of our benchmark algorithm slides. Okay, a lot of numbers and words here might confuse you. Okay, just have to look at the black box. Okay, the black box represent us. Okay, and then you see SPX, EFA, and VT. Write these three so-called words down. Okay, SPX, EFA, and VT. Okay, you write it down. When you Google it, you'll be able to find the information. What are they? They are basically index fund that you can in the market. Okay, they are index funds in the market. So look at the chart. Okay, they are colored between green, purple, and yellow. Okay, the performance from June 2008 Jan to 2009 Jan is going down, but our performance, my algorithm performance, is the blue line. It goes the other way. It's outperform the market. Okay, it outperformed the market. All right, this is, but I black out my name of the algorithm. Okay, it outperformed the market. This is only one slide from our presentation deck. Okay, one slide from our corporate presentation deck. Okay, just want to give you a quick example how algorithm can help trade the market. Okay, you can take your time, you can take a picture, and then you can see, okay, what is the max drawdown. Okay, our drawdown is, look, max drawdown. Okay, max drawdown meaning what? Okay, meaning floating loss. Okay, For SPX, it's 13.53%, meaning when you have $100,000, we have $1,000 in there, the max drawdown is 13.53%, meaning there's a time that your money went below $1,000 by $130. So you're talking about $870. Okay, so for EFA, the max drawdown is 18.72, meaning okay, your money you're below the money by 18.72%. For BT is 15.25, but for mine is 0.44, meaning you have $1,000. Your max drawdown is $44. So you're negative $44 out of $1,000. So to you that the max drawdown is the lesser the better, right? But for performance, for profit, okay, is higher the better. All right. So talk about risk reward ratio. Okay. Let's say, for example, the max drawdown is 1%, but the returns is 10%. What is the risk reward ratio? 1:10, right? Meaning every $1 I risk, I make $10. Is that fantastic? Right? Understand? If it's fantastic, you can key in yes. Okay, simple, understand. All right. So for my algorithm, my max drawdown was 0.44%, but that year I make 27%. Okay, so it's 0.44 over 27%. So it's a fantastic risk reward ratio. Okay, because we take care of the risk. We take care of the risk to limit to very, very, very low. Let's say, for example, 0.44. If I put the risk, if I maximize the risk a bit, maybe I put it to 2%, and then my annual returns will be 4 times more. Meaning, if my largest drawdown is 2%, I can make nearly 80% that year. All right. So this is basically this, and that's my one on this about our fact sheet. This is the performance for the year since 2016. All right, per month, as you see, per month is all positive. Okay, all positive. 2017 was quite difficult, but we still achieved 30%. And 2019, I didn't update the slide, sorry, only up to October. And then this year so far we are about 25%. Okay, not so bad. Okay, but it will not beat the previous years because this year has been quite difficult. All right, so this is very simple performance chart. Okay, every month we make a little bit. Okay, accumulated to be. Okay, 2018 we did 40%. All right. Okay, a poll. Okay, I want to ask you, making 15 to 20% per month with a drawdown of 30 to 50% better, or making 2 to 5% per month with a drawdown of 5 to 8% better? All right, I need you all to put in the chat. Okay, option 1, option 2. Okay, which one you prefer? Okay, key in 1 or 2. Okay, making 15-20% better or making 2 to 5% better. Okay, you can key in the type in the comment. You want number 1 or number 2? Okay, Chris say option 2. Any more? Alex, option 2. Okay, this is a presentation I do during seminars also. Okay, majority of the people will choose option 2. Okay, yep, option 2. Okay, meaning you guys, most of you guys are aware, okay, what I've talked for the past 20 to 30 minutes. Okay, meaning that you reduce your risk. All right, so what if you're making 10, 20, 12, 15 to 20% per month? Okay, but you're risking a lot of drawdown. Okay, 30 to 50%. Right. Of course, if it's a small account, it's fine. All right, but if you're a big account, you're managing, like me, I'm managing multi-million dollar portfolio. I cannot have the risk of 30 to 50% drawdown. Okay, say if I'm managing 10 million, I'm losing 5 million, you know. But if I'm managing 10 million, the max loss I get is 5 to 8%, meaning, okay, 10 million, 5% is 500,000, 8% is 800,000 or 10 million, compared to 5 million out of 10 million. All right, but I'm giving 2 to 5% a month. Okay, let's say 2% a month, I make 24% a month. Isn't that a fantastic? Isn't that a fantastic product already, right? So you guys, I'm not saying that the option one is wrong, okay? But if you're trading your own money, you're willing to risk it, it's fine. If you believe in your trading and believe in algorithm, it's fine. But it's just that 15 to 20 per month, 15 to 20% per month, the drawdown should be about 10 to 20% a month and not 30 to 50% a month. All right, the risk reward ratio has to be always at least balanced. Like if you can make 30% a month, your risk should be 30% a month. Okay, wealth management today. Okay, we're approaching near the end of the presentation. Okay, wealth management today. Okay, you're talking about maybe only 10 years ago, everything's in manual. Okay, there are reminders, making phone call, asking you to buy stocks, you know, this and that. But now, you come the era of machine trading. Okay, technology, as you know, now it's about technology, right? AI. Okay, AI means artificial intelligence. They will continue to disrupt the traditional industries. Okay, so even the retail business has been disrupted. Like people are buying things online and not going to the shops anymore. Right, same goes to wealth management. They want, if I can design a robot that can trade for me safely and consistently, why don't I let the robot do it? All right, because robot has no off days. Right, for me, I have an off day. Like today, I need to take time to talk to you. All right, if because I have a robot running. All right, if I don't have a robot running, now is my working time because I'm trading London timing. Okay, all right, it's lunchtime London now. Okay, I start work at 3 to 4 p.m. because London starts at 3 to 4 p.m. local time here. All right, so if I'm doing manual trading, I cannot even talk to you guys. All right, so this is how fantastic algorithm is. Okay, you can optimize your time and you can trade without emotions, provided that it makes money. Okay, 7 reasons why traders fail. Okay, I this is in the internet, you can read. Okay, or it's very common. Okay, they do not have a stop loss, meaning when they enter a trade, they do not put the stop loss. All right, and then they oversize their trades. Okay, meaning that they trade overly big. Okay, they blindly follow trade ideas, like hey brother, I tell you tomorrow there's a stock, or tomorrow, okay, something is going to happen in the US. I think the dollar is going to drop, so you better go and buy euro dollar, buy as many as you want. Right, tomorrow the dollar is going to drop, and then you just take the idea and go and buy. Okay, there's no such thing. All right, okay, they don't have a trading plan. Okay, meaning that they depend on their gut feel, all right, to trade. Okay, they do not have a trading plan. Okay, and then they just trade emotionally. Okay, so this is all wrong. Over trading, that means you can trade a lot of times, but over trading meaning more than your quota. Like one day you're supposed to trade 5 trades, they become 10 trades. Why 10 trades? Because you lose a 5 trade, you want to trade another 5 trade to make back that 5 trade, but end up you lose all 10 trades. This is 90% of the time for sure, because it's called revenge trading. Okay, if you have a trading plan like scalping, today you want to trade 5 trades, you make 3 out of 2, good, right? You make you make 1 out of 4, you lose money, that's it, stop. Tomorrow is another battle. If not, go on like this, just like gambling. You go casino, you stack up, and then you double up, and then end up one day you will lose. Okay, it's the same as trading. Trading, if you don't manage well, it's just like gambling. Okay, it's exactly the same. All right. Okay, the last slide. Okay, and the true winners in all this is who? Okay, investors who embrace technology. All right. So how you how well you trade, one day you will want to turn it into a robot too, right? Am I right to say that? It takes up a lot of your time, right? So those investors who embrace technology are the true winners. All right, Alex asked a question. So how to measure our trade affordability to not oversize our trade? I wouldn't say trade affordability is the right word, right? I would say trade risk planning. Okay, so very simple. I don't know if you are familiar with MT4 FX. Okay, MT4, for example, a 10K account. Okay, trading one lot is $10 per lot. So if your take profit is 10 pips, so your stop loss is 10 pips, let's say. So you're making $100, and then out of 10K, you're making $100 already 1%, and then that is too big, I would say. So only by putting 100,000, then you can trade one lot. Alright, if you put 10,000, you can trade 0.1 lot, which is mini lots. Okay, mini lots. Okay, it is another topic altogether. Alright, so today I only focus on trading psychology and trading risk planning. Okay, this oversize of trading thing is another topic altogether. Okay, I don't think today we have time for that. All right, so this is today's presentation about trading psychology and risk management. All right, so those of you who are keen to find out more about algorithm trading, EA, robot, okay, you can always go follow me. Okay, and then as I see that someone already clicked the profile, is this link my link? Let me check. Oh yeah, this is my link. All right. Okay, follow me has already clicked my link. Okay, you can go to my link. Okay, and of course that is my algorithm, my performance. Maybe I can present a little bit, Gerald. If I can tell them a little bit about my follow me link. So maybe you can. Is it okay if I present to them my follow me profile? Okay, I believe all of them are follow me users. All right, so they can just click the link and then copy from my follow me. All right, it is. You can check the account. It has almost 2 to 3 months trading record already, and you can also check my followers that copied me. Okay, they made more than 30% already within this 1-2 months. So anything you can use the follow me chat, okay, my platform, and message me personally, then I'll answer you using the follow me chat inside my follow me private message chat inside. Okay, do you have any advice on risk management, like any recommended risk reward ratio? As I said, I don't have any like recommended. That's another topic altogether. It will take another 2 hours to explain to you what is what is the risk management and what is risk ratio. All right. So very simple. If you want to learn, you can always go and get a book to learn, or read from Google, or get someone to teach you over at your country or whatever. If not, you can just go to my Follow Me profile and don't think about anything. Let me use my robot to help you trade. All right. For you, your cost is plainly just $30, 300 points or $30 a month, and then I will guarantee you that you will make money out of it. That's simple. That's the beauty of algorithm trading now and technology. You have software like Follow Me, so they call it social trading platform to help, right? To help novice traders to make money. Like the all shortcut, okay, all shortcut into basically it's all shortcuts. All right. One more question. If I'm bear on USD in this scenario, what strategy shall we take? All right. You're bear on USD, right? Meaning that Donald Trump will win or Donald Trump will lose. All right. I guess if you're bear on dollar, you just trade euro dollar. You just buy euro and you buy euro dollar. All right. Or you sell dollar yen. All right. This is the greatest bet. Of course, you can go to the bank and throw I mean change all your US dollar away, right? So there's or you the best correlated in dollars is euros or yen, right? If you are bear on dollars, right, you go and sell dollar yen, right? But this is only if you ask me you're bear on dollars, then I ask you which pair you should trade on. Okay, that doesn't mean that I'm bear on dollars. All right, don't take it as a tip that I'm bear on dollars. All right, I don't think dollar will be bearish, and I don't think dollars will be bullish. All right, because I am not Donald Trump. Right, you cannot assume that Donald Trump is losing means dollars is coming down. Donald Trump is winning means dollar is going up. It can be different way. All right, do not take bets. Okay, do not take bets. Then for me, my algorithms don't take bet. They will gather all the data and gather all the information and trade accordingly. All right, anyone has any more questions? Okay, Gerald, seems like no one has any more questions.
Okay. Thank you, Mr. Edmund. Thank you for providing us with so much knowledge. And then, to be honest, I kind of like your sharing because your sharing kind of inspired me how to be a better trader. So, next, who would want unlimited commission? Okay, Mr. Edmund, can you mute your mic?
Okay.
Sorry about that. Okay, next, would anyone want unlimited commissions? Because I bet all of you do. So can you check out this offer that I'm popping out right now? You can see, can you click on the offer? On your right, can you see that? Okay, so because Follow Star are going to bring you unlimited commission. Yes, click on the ring, check out Follow Star here. You can see the green color there, click there. And then if you don't want to click, you don't want to check it out, I would say that you're saying bye-bye to money. So all of us want money, right? Okay, besides, in order to ease new user experience, okay, Follow Me has created 4 IM groups. So one group named Beginners Talk. It's a group of new traders with 3 super duper experienced traders. So they are here to guide new users. Hold on, let me share the link here. Okay, so kindly check out this link. Okay. So this is click on the link on the right now, and you can see using the same link, right? Same article. There are 3 different signals provider groups. It's meant for new traders to follow experienced trader signals basically for copy trade purposes. So if you are a new trader, you're looking for a trade master to follow. So to be honest, this group would be perfect just for you. Okay. Lastly, thanks again to Mr. Edmund. So kindly follow our presenter. You can see his profile is printed on top. You can see that. Okay. Thank you everyone for your time being with us today. There's a quote saying that learning has no boundaries. Therefore, kindly check out the hashtag of Follow Webinar. Make sure you subscribe and stay tuned for more exciting updates. Thank you and have a nice day.